Hello fellow chartists, welcome to my YouTube channel. I am the Chartist, and today we had a big red day for the S&P 500. Okay, so let's talk about this. In the weekend video, I talked about 3 different scenarios that could possibly happen, right? I talked about how the SPY could just continue up and fill out this megaphone pattern, this red megaphone pattern that you guys see here. I talked about another bullish, that's a bullish scenario. I talked about another bullish scenario where it can come back and test this red support line, blue support line, excuse me, and then it go up and bounce from there. It looked like that's the scenario that's playing out. But of course, there's also a bearish scenario where SPY can break down from the blue support line, retest it. And if this is the bearish scenario, this is where you want to enter. You want to enter on the retest and head down lower, okay? So if we lose this support line, this blue support line that has acted as an equilibrium level since, excuse me, sorry about that, since May 19 of earlier this year, okay, if we lose that level, I will switch my sentiment over to short-term bearish. Matter of fact, I don't think I'll be short-term bearish. I'll be probably medium-term, okay? Because if we lose that level around 4, that's right now, tomorrow it would be around 466.5.6, right? So if we lose that level, which we pretty much did today, well, almost. If we lose that level tomorrow, I will be entering on that retest, and I will start betting to the downside, okay? We could head down pretty low. All right, we can head down to 461 first, maybe to the 458 range, possibly lower, guys. Okay, so if we lose this support level, this support line, this blue support line, I will be switching over to bearish. Okay, you see how I drew that in? It break the support, retest. The retest where you want to enter, and then you bet to the downside. Okay, this scenario is still in play, however, as long as it's above this blue rising trend line, this scenario is still in play. So another scenario you could watch out for, if it does break below but then it recaptures, that's another bullish scenario, and I would buy the recapture. Remember, guys, a proper recapture, I'm using this on a daily chart, so when you use it on a daily chart, it could take days to play out. All right, obviously, if you use a smaller time frame, like a 1 hour time frame, 5-minute time frame, they'll be a lot quicker, but pretty much the rules are the same. So pretty much what I'm saying is, if it's a recapture, it breaks below the support, recaptures the support, I want to see that support get tested. Once it get tested, like something like that, it's not going to be perfect like that. Maybe, it'll be different, or maybe it'll be exactly how I drew it. That's where you want to enter. Off the support, let the support recapture, may go up a little bit, and then the retest and ride the wave all the way up. Okay, so those are the scenarios that I'm looking for. As of right now, this scenario is not in play. This scenario is still in play, where it comes down to retest the blue support line, which is what's happening now, and we could get a bounce off of it tomorrow. The other bullish scenario, I'm going to say one more time, we lose the support, but it gets recaptured, test it, and then it'll head up higher. The bear scenario, we lose that support, it retests it, it gets rejected from that support, which will be treated as a resistance, and then we'll head down lower. Okay, guys, this is price action technical analysis. All right, we're not here to predict the market. So for all you Michael Blurries and Stonk only goes up crew, my video was not for you, unless you don't, you can still watch it, help me with my views and YouTube algorithm, right? But I'm making this video for my fellow price action traders, okay? We make money either way, to the bull side or to the bear side, it don't matter. That's why we want to be prepared, okay? For either a bearish scenario or a bullish scenario, that's what we're doing, okay? So I told you, I identified where you should enter. I identified the scenarios. All right, please remember it, okay? Take a look at the VIX. The VIX did not, is at 12:48. There's still 6 minutes left. All right, the 5 DMA is at 20.5. So technically speaking, a close below the 20 DMA would be a bearish move for the VIX, okay? And the bearish VIX is a bullish SPY. Of course, y'all know that already, okay? But as you can see, we had a green day. I had an update from this day, because last time it closed around 1869. Today it's up $2, a little, almost $2, okay? And it looked like we're gonna have an inside day candle, because I doubt the VIX will just jump up in the final 6 minutes. Of course, it can happen. Anything can happen. But as of right now, I'm seeing an inside day candle. So of course, the mother candle's high is right there at 21.34, and the mother candle's low is at 18.65. If you guys don't know about this trade setup just yet, please look it up, Google it, or check out another YouTube video channel that explains it more in depth, or check out Investopedia. They got some good information on it. So basically, pretty much what you do with this trade setup is you wait for the range of the mother candle to get broken. So if the high gets broken, which is up here, you bet to the upside. If the low gets broken, you bet to the downside. Okay, of course, you got to manage risk still and watch out for fake outs. So pretty much if the mother candle gets broken, it goes to the upside. That's bearish for the SPY, guys. And if the mother candle's low gets broken, there's a lot of room for the VIX to head down, and it will be very bullish for the SPY. Okay, so definitely keep your eyes on the VIX as well if you are trading the SPY. Okay, so remember, these are our scenarios. We're going to keep it very simple, and this is the setup for VIX. Okay, maybe you don't want to trade the SPY. Maybe you want to trade VIX instead. Okay, we got an inside day candle trade setup. All right, or you can just use this setup to influence how you would trade the SPY. All right, guys. Moving on to triple Q. Triple Q starting to look bearish, okay? We lost this rising trend line, this white rising trend line that started from the low of October, touched there, touched there, touched there, had about 4 bounces off of it. We lost it back in December 3rd. We recovered it, we recaptured it. That's a bullish move. However, today, look where it closed. It closed right below it. Okay, and it's even lower on the post after hours. Okay, so triple Q is looking pretty bearish right now. So what I'm watching for, since we lost it, I'm watching for the retest, and then it'll head down lower. Okay, that's the bearish scenario. So a retest, the retest is where, or the back test, I like to call it, right? Get that back test, that's where you enter. All right. Watch, and of course, possible recapture. All right. All right. The recapture, the bounce, that's where you want to enter. Head up higher. All right. We're going to keep it just that simple. Try not to overthink it. All right. So that's a SPY. That's triple Q. Before I continue, I want to talk to you guys. This is a little commercial break, the charter style. I want to talk to you guys about stop losses. Now, a lot of times, most retail traders, we are so happy when we make profits, right? And that's a great thing. But I also want to talk about the importance of stop losses. I want us to start taking pride and being proud when we respect our stop losses, okay? It doesn't matter. You could win 10 times in a row, but it only takes that one loss to wipe out all your gains. And to avoid that, you got to respect your stop loss. So if you're one of the people who did not make profits today, but you did respect your stop loss, you guys had a good trading day. All right, even though it might not feel like you did because you didn't make money, trading is a business. We are not gamblers. We are businessmen and women. And respecting our stop loss and managing risk is a good business decision. All right, so back to the analysis. Anyways, so Dow Jones, we had this breakout back in December 9th, and then December 10th was very bullish. It came down, it tested out the breakout level, okay? That's what you call a nice back test, and as you can see, that hammer candle got a lot of buying pressure, all right? That's what we want to see. When we got a level, like a support level, that's what you want to see. It's strong buying, right? Kind of like how the SPY Came down to a support level. Not seeing strong buying pressure. Make me worried a little bit. Back to the Dow Jones. Sorry about that. So that's what you want to see. But then look at the next day. Well, not the next day, but today. Sold all the way down and it closed right there. Right at this red equilibrium level. It's almost a false breakout, okay? False breakouts are very bearish, all right? So basically, if it's a false breakout, I'm going to be switching over to bearish and riding the wave down, okay? Switching over to bearish if it's a legit false breakout. Of course, like I said with SPY and QQQ, there's also the possibility we get recaptured and head up, all right? Recaptured. I'm showing you guys what a proper recapture looks like. Okay, it recaptures, it bounces like a back test to let us know this recapture is confirmed. When it gets confirmed, that's when you want to enter, okay? Most people, they want to enter before the move happens. It's okay, you don't have to enter, it don't have to be perfect. You can still ride it up. While it's on the way up, just ride it up. Follow the smart money. We follow the smart money. We don't want to guess or try to predict where the smart money is going to go. We want to follow them. That means they're going to go first and we follow, okay? There's going to be people out there that most likely not profitable traders that are going to try to predict the market. Okay, we're not here to predict the market. If you see people predicting the market, let them predict the market, all right? You can learn from them. Learning what not to do is just as important as learning what to do. All right, so when you got these fools, and I do mean fools, trying to predict the market, acting like they're Miss Cleo and they could see the future, you listen to them very carefully. Okay? Listen to them very carefully and learn what not to do. Okay? They might be right every now and then, but overall they're not right, you know? And then notice how excited they get when they're right, because they're not right that often, you know? A broken clock is right twice a day, right? So, yeah, watch out for those fortune tellers. Anyways, moving on to IWM. So, IWM came down to this critical support level. Once again, recaptured, moved up about $10. Got rejected from this critical resistance level. Now we're heading back down. And it looks like it closed just below that critical support level. Okay, so the support level was around 216.4. IWM closed at 216.2. So it's not looking too good. So scenarios to watch. Wait for that back test to confirm and then we'll head down lower. Okay? Or, guess what I'm going to say? You guessed it. Watch out for the recapture. Okay? Boom, boom, boom. Alright? So, if IWM can get back above 216.4, preferably 0.5, it'll put our resistance level around 221 back in play. But as long as it stays below 216.4, like it is right now where it closed, you know, possible back test. But even if we don't get the back test, stay bearish. Look for shorting opportunities. Okay, guys? All right. So that's what I got for IWM. Let's take a look at ARKK. I'm not sure when the last time I covered ARKK, but it's looking very bearish. Kind of why I stopped covering it. It's not looking too good, you know. But, hey, you can still make money to the downside. Obviously, it's bearish, trading below all moving averages. All right, looks like a 5 wave to the downside. Okay, here. Relief rally, so it's possible we can head down lower. All right, so below, there's gonna be some support around 80. What was that? 89.4. Okay, that's a critical support level right now. Below 89.4 could send us much lower, obviously, possibly down to 85, maybe even 80. Okay, now for me to see some bullish momentum build again, obviously it needs to get back above the 5 DMA. The 5 DMA is currently at 98.3. All right, so if it starts closing above 98.3, that's a sign that instead of heading down to a lower low or a 5 wave to the downside, this could have been a higher low We could be heading up higher back to test some of these resistant levels. Okay, we got resistant at 100, 105, and up here 113.4. Okay, so let's watch what ARKK wants to do. All right, Bitcoin, not much to report on Bitcoin. Pretty much the same. I've been telling you guys I'm bearish on Bitcoin. I'm not gonna look to enter on Bitcoin unless it can reclaim 52.8 or overall 53K. All right. So yeah, there's that. Not much to say about Bitcoin. Cryptocurrency is not looking too good. Okay, so that's all the technical analysis I got. All right. I also want to mention I got my Discord. I cover the SPY. I give you guys the buy zone intraday updates throughout the day. If you guys want to request some technical analysis, I got a TA request and I cover it all. Whatever you guys ask for. We had some good trades. I'm not going to tell you all the good trades. We don't just trade SPY like NVDA. I was bearish on NVDA. It broke down from this wedge. Okay, had a price target is 288. Crushed it. My next price target is 270. All right, but I'm not gonna go too in depth in that because that information is for my awesome Discord members. Okay, no offense, guys. You can dislike my video. It's okay. I understand. Unless you guys want to come and join the community. All right. So thank you guys so much for watching. You guys are so freaking awesome. I hope you make a shit ton of money, and I'll see you all soon.